everyone, I'm your host Nivina Maniraj and welcome to RHB Money Chat, where we provide you with insights and tips on how to better manage your finances. The COVID-19 pandemic and the resulting global lockdown have caused entire economies to slow down worldwide. It's natural for those of us with investments to feel unsure of what to do next in these unprecedented times. And for those of us who are just about to get started, don't know where to begin. So joining us today to help answer these questions is Frankson Liao, Head of Investors Advisory RHB Bank Berhad, who will be sharing some insights on investing. Thank you for joining us, Frankson.
Happy to be here.
Before we get into the thick of things, I have an investment joke for you. What do you call an investor who bought shares in a meat company?
Stakeholder.
That's right. All right, dumb joke done. Let's get down to business.
Right.
Okay, to me personally, what's happening right now doesn't seem to make any sense. Global economies are slowing down and showing signs of recession, but the stock markets seemingly take off. Why is that?
As Paul Krugman, the economist, said, the economy is not the stock market. The differences is how the information is compiled and reported. While the stock market information is pretty real time, the economy stats or data is reported after the fact. For example, you can get Bursa Malaysia information in real-time basis, but the country's GDP is reported after the quarter. The stock market or indices are indicator of the market psychology, derived from willing buyer and willing sellers who forecast the pricing of the individual stocks which form the basis of indices. Stock market tends to predict the future outcomes of the economy, with positive sentiments such as the reopening of economy, hope of finding the new vaccine and huge stimulus package by central banks and government has actually boosted the confidence for investors.
Maybe you can elaborate a little more on exactly how this pandemic has affected global economies and Malaysia's specifically.
Right. The pandemic has caused a massive destruction in global economy. Imagine that your heartbeat has stopped for 1 minute. The blood flowing into the vessels are not able to circulate around your body. That is exactly what happens in this current situation to industry where workers are unable to work, like your blood cells.
Right.
And in global supply chain has been disrupted just like your body failed to move. The MCO in Malaysia or lockdown in many countries caused supply glut and unemployment rate to increase rampantly. Back in Malaysia, we are seeing increase of unemployment rate, and the figures, IMF actually forecast our GDP to be on the downside of 3.8% for 2020. During the pandemic period of April, the Global Manager Index, PMIs, which include the purchasing activities, was just 39.8. Now, on normal circumstances, this indicator is above 50 for a positive sign of economic growth. Last month, latest result from China, we see a little bit of hope, releasing a PMI data of 50.9 at the end June.
Okay, so as far as I can remember, it took stock markets quite a bit of time to recover after the global economic crisis of 2008. But what we are seeing now is a much faster recovery in the stock markets. Why do you think that is?
COVID-19 is a health crisis, whereas the crisis of 2008 was related to financial crisis.
Okay.
The 2008 crisis was the housing bubble and in US and elevated to the next level when the bank sold the CDOs, collateralized debt obligation, which is a mortgage, is a form of mortgage linked to investment as a form of investment to investors. The dominant effects begin when those investments collapse. Both US government and the Fed reacted rather slowly and only began pumping in liquidity when Lehman Brothers collapsed.
I see.
This time around, central banks around the world actually has reacted rather quickly. We can see a huge surge in liquidity. For example, USD 2.5 trillion has already been pumped into the economy has eased the investor concern on the market and further increase the confidence level with whatever it takes stances from all central banks in the world. because of this huge liquidity and low interest rate environment, the sharp decline of share prices have created an influx of new retail investors joining the stock market. Bursa Malaysia saw a 96% increase in new accounts from January to March, and growth like this is seen in markets across the globe. In US, there's an increase in user activities on Robinhood platform, which nearly tripled. These investors saw a potential in tech-related stocks, which has emerged as the biggest winner of the pandemic season. Heavyweights like Amazon, Facebook, Microsoft, and Google combined make up more than 20% of the market capitalization of S&P 500.
That actually sounds like really good for investors. So I think the next question on everyone's minds would be, should we jump onto the investor bandwagon as well?
There's always the question, should we follow the herd or sit out for now? On the overall vibe is positive, I should remind you of the possible worst scenarios. Number one, while many countries are in recovery, we are seeing a second wave of infections.
Right.
Even in developed countries such as US has been spurring out. Furthermore, the vaccine has yet to be found. And by the time the vaccine we find it, the virus may have been mutated.
Correct.
Making the vaccine ineffective.
Right.
This is beyond everyone's control, but they could be a disruption brought on by the second wave. Although stock market is not the economy, but stock market relies on the future potential earnings of foreseeable futures. With high unemployment rate and reduced spending will affect the profitability of the companies overall. People without jobs or income won't able to consume or spend money, which
Right.
companies not able to offer any services since nobody can afford to pay. Lower revenue will definitely impact the share price of the companies.
So having taken all these factors into consideration, in your opinion, is this a good time to invest?
Before we start or ready to invest, it's important for us to understand our investment goals. At interesting times like this, your circle of friends has started investment and make good money from share market. The psychology feeling happens every corner of the world is now known as FOMO. Now what is FOMO? The fear of missing out, because most of the investors felt that they will miss out an opportunity if they don't invest now. This may shift your investment goals from long-term to short-term, as well as anticipating a better returns in the market, since FD are relatively lower.
Correct.
Hence, it's critically important, okay, to identify your investment goal before you participate in the market timing. But you also need to be mindful whether you're investing or trading at times like this. If you're an investor thinking to trade on daily basis, then you may have a full-time capacity to look into your investment. If you are tied with your business and still employed, your investment perspective may be different from your friends. You should ask yourself, what type of investor are you? It's important to identify your risk appetite before you start investing. You need to understand your risk to gauge what is your risk tolerance. Now, if you are FD centric and used to place FD, then suddenly turn aggressive to invest due to the market situation, this may lead you to be a very uncomfortable position when the investment turns red or negative.
Correct.
So how much negative returns can you tolerate? The time horizons also plays a very important role. You may have investment goals, but you may start to deviate due to in fear of losing the opportunities in the market. Do bear in mind, most notable investment guru in the world does invest a longer term tenor.
Right.
So investment goals, risk appetite, and time horizon is all you need in the mindset before you can consider any forms of investments. If you are fully aware of this, then you can start thinking of your investment allocation to build a nest in future.
Investment goals, risk appetite, and time horizon. I got it. Okay, say I do decide to invest now. The next question would be, what do I invest in? And would it be a good idea to buy in on the dip?
You should ask yourself, how do I invest rather than what I invest in? The question will apply regardless of the market situation. There's a saying, don't put all your eggs in one basket, which is true when it comes to investing.
Correct.
If you concentrate all your money in just a few stocks, there is a higher risk of losing everything. Allocate your investments in different portfolios with different goals. For the long-term goals, have a good mix of products that can help you weather any market conditions. Remember, there isn't a single asset classes that consistently give high returns. If you diversify, you won't have the most insane good returns, but you won't have the worst either. There is less volatility because you spread your risk among the different asset classes.
Correct.
At RHB, we offer a range of products to cater the whole spectrum of risk tolerance, whether you are new or seasoned investor, taking a slow and steady approach in form of dollar cost averaging and thinking long term is always better. Let's compare to these two investment giants, Warren Buffett and George Soros. Buffett's investment style and principle based on valuation made him one of the richest investors in the world. On the other hand, George Soros, known as the man who broke the Bank of England, he actually earned $1 billion US in a single day in 1992 through currency speculation. Who do you think make better returns in long run? I think you should know the answer.
I think we all know the answer to that one. So before we end our session today, Frankson, is there any last words of advice you'd like to leave us with?
3 things over here. Stay invested, stay safe, and stay diversified.
Thank you, Frankson. If you'd like to find out more on investing or reallocating your investments, follow the link below and we at RHB will be more than happy to assist you. You can also comment below if you have investment-related questions and we will try our best to answer them. Stay tuned for the next RHB Money Chat, and until then, have a great week, stay safe, and I'll see you again soon.